What is going on with the U.S. consumer right now? We just learned the unemployment rate climbed to 4.6% in November. That's the highest level in more than 4 years. As that long-delayed government report shows, the economy added just 64,000 jobs, added to fresh data talking about retail sales being kind of flattish to decelerating, and questions are mounting about how resilient consumer spending really is. Michelle Meyer can answer all of this for us. She joins us from Mastercard to break down these trends. First of all, great to see you. Thank you for coming in.
Of course.
We are getting more positive micro data points on spending. We talked about those stocks that are doing quite well the past month. How would you describe it?
I think the consumer is still engaged. The consumer's here, the consumer's spending, and we are seeing on a day-to-day basis in terms of the actual spend trend. So when we look at Black Friday, a critical moment for the holiday shopping season, retail sales ex autos were up 4.1%, driven by double-digit growth in e-commerce, big part of the story, but in-store also saw activity. And we continue to monitor this season. We're still running right about 4% or so in terms of spending. So you have a consumer that's there.
If we had zero inflation, I'd be like, great, 4% spending sounds, but if we have, I don't know what inflation is in the consumer these days with tariffs, 2, 3, 4, something in that world. So I guess what I'm trying to get at is how much of this is real, and what do you think is going to happen as we get into the first quarter? We're hearing so much talk about these tax refunds that are coming. If you don't know now, people, apparently you're going to get a nice check. But the companies know that too and might raise some prices. So how's that going to pan out?
So I think in general, the pass-through of tariffs and higher costs to the consumer has been slow, and it's going to take time. And you're absolutely right. It's probably not over because this is an adjustment process, a recalibration that companies have to make and consumers have to figure out whether or not they're willing to tolerate. But if you look at the inflation data that we have so far, and it's delayed, it looks like the holiday basket, or at least our measure of the holiday basket, inflation's running just about 2% or so. So it's a little bit above where it was last year when we had a lot of deflation. But this is not an environment of heightened inflation.
Are you surprised by that? There were so many calls at very high levels, very smart economists, and they may end up being right about tariffs are going to spike prices and we're all doomed. Like a lot of forecasts the last 4 or 5 years, those have been rendered, shall we say, wrong. Are you surprised?
So I think there's a few things that happened. One is the economy has proven to be so much more dynamic and so much more flexible. And this has happened over the last several years. It's not just in the face of tariffs. We've seen it since the pandemic, this adjustment. And in the face of that, companies stockpiled in advance. We saw a lot more inventory build, a big increase in imports in Q1. That was reversed in Q2. That helped in terms of mitigating some of the price adjustments. Supply chains, the extent that it was possible, seemed to shift. And remember, prices are not even across all products, and they're not even across all countries. So there's a certain amount of choices that presumably companies are making and consumers are making to try to avoid some of the price increases.
Right. No, I agree. It's kind of been, it ends with a whimper and not a bang, at least so far this year. I know you look at the data. We talk about consumer. I know that's where your hat now, but I know you look at the data more broadly.
Of course.
What do you think is going on with the labor market?
So I see very clearly an environment where churn in the workforce is lower. It's hard not to see that across a variety of different statistics. I think the key question is why? Why have we seen the slowdown in the hiring rate? And I think presumably part of it has to do with uncertainty, the uncertainty around how the changes in trade and the global realignment of trade will impact the workforce. So companies are trying to be a little bit more cautious in terms of how they allocate their dollars towards the workforce. I would imagine some uncertainty around AI as well, right? In the sense of, do you invest in the technology? Do you invest in the AI? Or do you invest in your workforce? And what kind of workforce do you need? But I think a lot of those questions will be answered over time, and that will allow companies to become more strategic in terms of how they hire. And you are not seeing an increase in firing. That is critical.
It's a good sign.